Hi, Matt Diva is my name, Managing Director of Emit Capital Asset Management. Welcome to the November update of the Emit Capital Climate Finance Equity Fund. Another solid performance for the fund over November, with assets under management increasing 2.8%. This included a 6.2% contribution from equities and a negative 3.4% contribution from the Aussie dollar, which rose against all currencies with the exception of the Japanese yen. The fund benchmark, the MSCI All Country World Index, returned 1.6% for the month, which resulted in a gross active return of 1.21%. Net of fees, the fund returned 2.7% for the month. The fund has returned 6.01% gross of fees over the last 2 months, or 5.7% net of fees. The best performing stock over the month was Siemens Energy, up 37%, with ASE Technologies up 25% and SolarEdge up 21%. To the downside, the main detractors were Algonquin down 30% on weaker third quarter results and Tesla down 17% as uncertainty continued over the impact of Elon's Twitter investment. From a thematic perspective, the fund's energy efficiency and storage stocks continued to outperform, contributing 212 basis points to the overall return, with energy transformation adding 83 basis points, water management 5, and transport and infrastructure underperforming again with a negative 18 basis point contribution. From a regional perspective, the Asia-Pacific ex-Japan market was the best performer, contributing 132 basis points to the monthly return. Reopening of some of the major Chinese cities after COVID lockdowns saw stocks in this region move higher from their recent lows. A lower inflation print in the US also contributed to a weaker US dollar, which saw flows back into developing and emerging markets. The European and North American regions contributed 62 and 53 basis points respectively over November, primarily driven by the continued solid performance of our energy efficiency stocks. The UK and Japan contributed 22 and 15 basis points respectively, with Latin America finishing flat on the month. During November, the portfolio added 3 new stocks. Our intent was to add exposure within the transport and infrastructure and energy transformation sectors, and reduce slightly our exposure to the energy efficiency and storage sector, which had run hard over the last few months. As a result, we added 2 electric vehicle stocks out of North America, Canoe and Rivian Auto. We also added Fuel Cell Energy, a North American fuel cell developer, as part of our energy transformation exposure. During November, we trimmed our exposure to Hubble, Acuity and Carrier Global, 3 energy efficiency stocks which have outperformed the market over the last 3 months. From an ESG and impact investment analysis perspective, each month the fund analyses each of our stocks against both ESG and impact investment data, and then aggregates the score across the portfolio. As at the end of November, the fund portfolio returned an ESG score of 6, with an ESG controversy score also of 6. Across our 3 ESG pillars, our environmental score was 6, social was 6, and governance was also 6. Each stock in our portfolio is also analysed against key impact investment criteria as defined by the fund. Given the nature of the fund, we target those impact investment categories which reflect our climate finance thematic strategy. As at the end of November, the fund portfolio retained a high alignment with our defined impact values. Additionally, there were no flags for any company operating in our avoided industries. Despite the volatility in the global market, the fund has performed well since launching at the end of August. I'd now like to take this opportunity on behalf of everyone at Emit Capital Asset Management to wish everyone a great Christmas and a prosperous new year. See you in 2023.